This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, I'm here at Mining Journal Select here in London with Sean Wade, the CEO of Power Metal Resources, and Rick Rule, of course, from Rule Investment Media. It's a pleasure to meet you in person. Of course, we did that podcast only a week or two ago, but it was very interesting for me. So thank you very much for taking some time to talk to us today. I watched your keynote this morning. How did you feel it went?
Well, I'm hoping it went okay. You're unwise to ask the author how it went. The temptation, of course, is to say the speaker was brilliant.
Well, I liked what you said about it being very quiet here, and that's perhaps a sign of where we are, because your phrase of, the cure for low prices is low prices. I thought maybe the cure for low interest is also low interest. What do you think?
Well, certainly the theme of the second part of my talk was that you have to love hate, that you have to buy things that are out of favor. The crowd, compared to the crowd that I compared it to, which is to say the New Orleans conference in 1980, this crowd this morning was probably 60. That crowd was between 6,000 and 8,000. So that says something to the upside.
Yeah, indeed. Well, Sean, did you caught the keynote, didn't you, as well this morning? Did anything stand out to you that Rick said?
Well, I think the thing that really struck me from Rick's talk was the talk about mean reversion, particularly in the gold markets. Yeah, I think 4 times the demand, I think you were saying, for gold, simply from a reversion to the mean. And that just, I think, is a really good indication of how a lot of mining equities explorers and physical commodities are under-owned in portfolios.
Yeah, indeed. No, it stood out to me as well, that fact. Well, you've talked about this merchant banking model before, but I wonder if I can hear from your own words what you actually mean by merchant banking model. I know that's what Power are doing, and that's what's interested you in Power Metal Resources, but from your own words, what do you mean by merchant banking?
To me, a merchant banker is sort of like a value-added investment banker, which is to say that rather than extract fees, the merchant banker adds money. A critical difference, but they add more than money if they're good at what they do. They add expertise, or I might call it adult supervision. I had the extraordinary good fortune of being a shareholder in the Goodman family merchant bank, Dundee Bank Corp, when they spun it out of Corona. And I watched that stock go from inception at 60 Canadian cents to 42 Canadian dollars. Now, it took 6 or 7 years of hard work, but that told me that if you could employ capital and employ intelligence simultaneously, that the return to shareholders isn't always extraordinary. Most merchant banks in the mining and energy business are privately held. They're mostly family offices. What Robert Friedland does is merchant banking. What the Lundin family does is merchant banking. What Ross Beatty does is merchant banking. It's very seldom that you have the opportunity to participate in a mining merchant bank in the public context.
Okay. And is that what you see in Power Metal Resources then? I know from when we spoke last time, you also said that you pick stocks based on the people within the business and their ability to deliver on that model. And you did an interview with Sean, I think last week for Rule Symposium. And Sean, you explained that you take early stage opportunities, you add value through low cost investment exploring techniques, and you seek to monetize that value. Is that why you like Power? Is that why you were interested in Power?
Partly that. In my youth, I was part of building probably 40 public shells.
Okay.
I did that because the way that you get into the ground floor is to create the ground floor. I'm 71 years of age. I'm not going to do that for my own account anymore. The microcap market is one where there's a lot of information asymmetry, and one that has spectacular upside if you're prepared to do the work. And at 71 years of age, I'm less willing and frankly less able. So in terms of creating the ground floor opportunities, that's what Sean is prepared to do, and I'm prepared, if I can, to hang on his coattails and see what happens.
Okay, good. Now, I also remember that you said that you don't like one project companies. You like to go for companies that have lots of projects, and of course Power have many projects all over the world, which we will briefly touch on in a moment. But I wonder if I can ask you a question. What metrics are you using to measure their success in the field and how that fits with the company's model? I know you spend an hour a month assessing your portfolio. An hour a week, I think it was actually.
An hour a month.
A month.
Per what I would call, well, like sub $2 billion companies. I spend, frankly, no time on Exxon. I don't feel I need to. I've owned it for a very long time.
Yeah.
The smaller companies, I spend at least an hour a month. And I should distinguish myself from other investors. Other investors have lives. I don't. But I have staffs, and other investors do. So when I say I spend an hour a month, if you look at the total staff time involved in portfolio companies, we're probably spending 6 or 7 hours a month.
Yeah.
That's more sufficient. In terms of how I'll measure, Sean, that's pretty easy. You look at net asset value per share, not book value, but rather net asset value per share based on market, and you look at how much capital is going to generate that. If he spends $10 million generating $2 million in net asset value, I'll fire him in the market, meaning I'll sell my stock. If, by contrast, he delivers $10 or $15 million in net asset value per share with a sunk capital investment of $2 million, then I'll probably buy more stock.
Okay.
It's pretty simple.
So, Sean, how are you going to deliver on that net asset value then?
Well, first of all, I mean, just to say very much thanks to Rick and to have his support and validation for our model and our business is absolutely fantastic. But look, in terms of delivering value, hopefully I think we've shown some of that already. If you look at Gold and Metal Resources, soon to be renamed Guardian Metal Resources, we IPO'd that about a year ago, and it's now about 60% of our market cap because it's performed extremely well. So I think the market hasn't caught up with the value yet. I mean, we're obviously, I would say, undervalued and relative to that move in the Guardian Metal share price. But another great example, I think, is our uranium portfolio. I mean, we've staked out a big portfolio. We've done a lot of work, early stage field work, the kind of thing you talked about in your introduction. And I think, we spent something over about £1 million there or thereabouts. And we're just about to complete a deal. We're in the process of completing a deal. We're still within a due diligence period, but we're obviously very optimistic that deal will complete with a globally significant resource investor who's valued that portfolio around about £10 million. So, I think in terms of a return, if we obviously, and that's, by the way, before we make a commercial discovery, which is the objective clearly for that business. So for Power Metal shareholders, they're going to get a 30% free carry on that business. And they're going to, I hope, very soon, see some major sort of commercial discoveries, but without having to sink more capital into that asset. And that's really the heart of the model. Now we're turning our attention to Saudi Arabia. I think we've talked a little bit about. We've put out a really exciting announcement today about a fieldwork program that's completed. We've got more news to come across the Saudi portfolio. And what the Power Arabia portfolio is going to be is the same model, the incubator model, but pure play focus on that Arabian Shield region. So if we can deliver the kind of value there that we've done already in some of our Canada and North American assets, I think shareholders are going to do very well.
Okay, and is it purely going to be, are you going to always look for an exit, or are you going to develop some projects if they have that potential, do you think?
I think that's a very good question because, hitherto, the way I would look at the balance of the portfolio now, it's about explore and then crystallize. Yeah. And we do that through IPOs or JVs, outright sales and so on. The Saudi opportunity could be a bit different in the sense that some of the partnerships that are potentially available to us could involve operations at a slightly later stage of the life cycle. So we could see some mine development. We have said before, typically we don't build mines. But what we do is we return value to shareholders. We mine money, if you like, if as to pass Rick's comments. And so where it makes sense for shareholders and where it makes sense from a capital allocation point of view, we'll look at all opportunities.
Okay. And on a daily basis, then, how are you sort of assessing the portfolio or measuring the potential for success versus, potentially a project becoming effectively a cash drain on the company?
Well, that's also extremely important. I mean, I've got a lot of hungry mouths to feed, at any moment in time, and it's very important that those businesses stand on their own 2 feet. They get their own capital, and ultimately they look to either spin out via IPO or some other way. So, as again, Power Arabia, as we talked about, we've mentioned a large pre-IPO financing round. This will be, and I've said it before, it'll be probably the biggest thing we've ever done in terms of a pre-IPO and then onto an IPO. It'll give the opportunity to get some serious investment into that business, but it'll allow Power Arabia to fund itself, fund all its drilling and operations. And will be owned partly by us, the parent, partly by external shareholders, And again, our shareholders will see value creation over time as those businesses make their own discoveries and their own success.
Do you think it's fair to say that Golden Metal Resources, now Guardian Metal Resources, is a perfect example of the model being executed?
Oh, 100%.
Okay.
I mean, we're just below 50%. Oliver Friesen, who runs our business, has done an outstanding job, not just in terms of what he's achieved operationally, but how he markets it, how he communicates to the market. He's extremely popular. He's one of, I would say, one of the best presented young geology CEOs that I've ever come across. He really is a great guy, and he's added tremendous value. And of course, we're an extremely happy investor. We don't pay any money towards it. We exercised our warrants recently, but we don't pay any of the bills. That's all Oliver's shareholders, and we're very happily enjoying the share price rise. And our shareholders, I'm sure, will see that value come through when this market continues to pick up.
Okay, well, that's certainly something I picked up this morning as well. You said you're very bullish about the next few years, and I think on the podcast you said the first or second innings or the first 10 minutes of the football game, if we're talking in Europe. So hopefully the start of a very bullish phase in the market. Just thinking about other investments you have, Rick, perhaps in the same model, this merchant banking model, have you had any previous success, any companies that you currently hold or held in the past that you can validate that merchant banking model against?
Dundee was, of course, the most dramatic example. There are not many public examples of that because successful merchant banks are much more commonly private. My own activities as a private investor for 30 years probably constituted merchant banking. I wasn't particularly eager to share the spoils because I was doing the work. I have participated. No, that's not true. On the public side, I haven't participated in any merchant banks in the energy business, but I've participated privately in 4, and they've done very well, thank you.
Okay, right, good. And Sean, then, where's the focus of the company at the moment then? Obviously Guardian Metals is looking after itself now, but where's the efforts of the company right now?
Okay, so 2 things really I just wanted to highlight as we close. I think, the Power Arabia financing and those operations, as I mentioned, there are a huge array of opportunities there across nickel, copper, gold, obviously, which Saudi's been very famous for, but platinum, rare earths, there's a whole suite of energy transition metals available for exploration in Saudi Arabia, so we're putting a big effort into that. Okay. We also have the upcoming IPO of First Development Resources in Australia. That's been quite tough because, the markets have been tough, over the last 2 years, and that was, it's an early stage exploration play. But we continue to be very positive on that one and very confident we're going to get that IPO into the market. So those are really the 2 main things that I would highlight at the moment, and I think, with Power Arabia in particular, there's going to be a lot of news flow. There's going to be a lot to get people excited about the stock. So I'm really excited about being able to say more over the coming months.
Excellent. And you're heading out to Rick's symposium, aren't you?
Indeed.
Soon as well. Looking forward to that?
Look, very much so. And we enjoyed it enormously last year. And we're looking forward to a very good conference again this year.
Excellent. Good. Are you looking forward to it as well, Rick? I guess you are. It's your own conference, isn't it? So.
Indeed. I'm looking forward to the contribution of the Mining Journal at that conference. We've tried to do joint ventures with various strategic partners for 28 years now, and we're delighted to have you all as participants of the conference.
Excellent. Okay, good. And the final word on Power long-term hold for you, providing Sean continues to deliver?
Sure. My sort of rationale was the way that you get it on the ground floor is to create the ground floor. At 71 years of age, I'm too old to do that now, so I'm allowing Sean to do it.
Excellent.
I had an opportunity shown to me last week that was a so-called ground floor opportunity at 30 cents Canadian. And as I did some work, I found that all the people that came in before me came in at 2.6 cents Canadian, and they were acting as though a markup from 2.6 to 30 constituted a ground floor opportunity. That's not the same thing.
No, okay. Well, thank you very much, Sean Wade from Power Metal Resources and Rick Rule for your time today here from the Mining Journal Select in London. If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.